Hello everyone, myself Vaibhav. If we take a look on the today's market, we are seeing the substantial gains in the Euro USD, and after the start of European trading session, the pace has only increased, and after yesterday's low established closer to the 1.203, we are seeing sharp turnaround, and this is the story of the day. And I think the major driving factor has been the across the board weakness in the dollar index. In the earlier part of week, the story was of dollar strength, where the dollar was gaining ground as the U.S. Treasury yields were on the rise, and for last two sessions, including today's session, there has not been much of a decline in the U.S. Treasury yields. These are still trading above 1.3% value for 10 years bonds, but the dollar has lost ground nonetheless, and I think now the major focus is again shifting back to the valuation thought, and in this process, euro and other currencies, particularly currencies dominated by commodity trades, are seeing sharp turns on the higher side. And if we consider the case of AUD and NZD, those currencies are showing more strength than even the euro, and I think for next week also we are likely to see the same theme playing out. So we will see in today's session what are the levels to watch out for in today's session, as well as on Monday, as we are going to wrap up the week. So let's get started for today's session. If we look at the data docket for the day, earlier in the day we got flash PMI estimates for the major economies of the euro area and euro area as a whole. And here the message is fairly clear that the manufacturing sector is taking a turnaround. And if we consider these flash estimates, some of the PMI readings are almost closer to 3-year highs, and this is a very welcome development from the policymakers' point of view. But one point of concern is still the contraction which is being seen in the services sector, as services sector require more people to people contact, and as a result of that, it is not being able to gather pace, as restrictions to contain the COVID pandemic are still in place, and I think it will take a couple of months more. And as vaccination will be more widespread, we will see the uptake in the services sector also in coming months. Moving on to the US session data, here just a while back we got the services, composite, and manufacturing PMI. This is also the flash estimate and released by Market Economics. And here, as expected, the US economy has continued to do well, and the estimates for this month, for the month of February, are also closer to the prior consensus or even more than that. And I think for US, the uptick is pretty good. And these economic data points, which have been on the solid footing for a month or two now, have shown some doubts regarding the policymakers' point of view on the inflation. But many of the Federal Reserve policymakers have expressed kind of confidence that even if the inflation peak up, we will have to see and wait how the unemployment situation evolves, and only after that the thought of raising interest rate might come back to the table. So we will have to see how the policymakers will react to these changes on the ground. Now moving on to the technical front, we will first see the technical aspects for Euro USD, and then we will move to the equity space where the focus is on the Dow Jones Industrial Average. Let's start with the Euro USD technical outlook first. This is the daily time frame chart, and the Euro USD has been in a consolidation phase on the daily time frame chart, where the range has been of around 150 pips, and this turnaround, which I am talking about, started in yesterday's session after getting closer to this price zone of around 1.2, and now it is back above 1.21, and near-term outlook has changed accordingly. Just a couple of sessions back, as I remember, I think during the starting sessions of this week, I had talked about the breakout on the lower side, and we did profit from that trade. And now that things have changed, I will have to change my outlook also. So I'm no longer talking about the shorting opportunities in Euro USD, but rather some of the levels to watch out for in today's session. In today's session, we will not much focus on going for fresh trades as today is the Friday, and after the US closing, we will be signing off for the week. So we will have to mark some levels which might prove helpful, and if we see the price action playing out as per our anticipation, then we will have a better chance to profit in next couple of sessions also. So here, if you consider the technical formation so far for the Euro USD, the regression curve is still inclined on the on the upper side, and here the pivot point, the pivot point is coming into play around 1.218, and that's the price zone where we saw the Euro USD struggling in its last phase. But now, if you consider the price action formation, this low is higher compared to the prior swing low, and looking at the turnaround, looking at the upside momentum which we have observed for last two sessions, I think we can bet on the Euro USD to get closer to this price swing high, this resistance zone, and then we will have to see how it reacts to this resistance zone. And I think if it is able to cross and hold above this, then in due course of time, it might even try to get back to its mojo and get to the levels of around 1.23 or even beyond that. So for today's session, the price zone to watch out for is going to be 1.210. I think as long as the Euro USD is holding well above the 1.21 price area, we can be continuing continue to hope for continuation of this bullish momentum and look for buy trades. And I think the risk reward ratio is also going to be in our favor, as we will not have to take much token risk, as we have this price zone comprising of this confluence of 50, 100, and 200 SMA in around 1.21, and as the price action has shifted on the higher side, I am expecting the 50 SMA to also catch up with this 100 SMA, and in due course of time it is likely to cross above this. So here watch out for this price area 1.21. I'm repeating again, and the stop loss can be kept lower just below this 50 SMA, and that should be good enough. And on the higher side, the immediate swing high, which is there around 1.217, can be targeted on the higher side. So the risk reward ratio is also good enough. Not exactly 1 is to 2, depending on where we get the entry for our trade, and the stop loss, we will have to adjust it. And at the time being, I can't be really explicit or precise on the pips of stop loss and the target. So we will have to see how the price action evolves, and as long as it is trading well above this support area, we can be fairly confident of making profit in this trade. Now moving on to the equity space. This is the daily time frame chart, and in yesterday's session I had talked about the possible topping out of the reduced industrial average and moving lower even below these prior swing highs, which are there around 31,300, but that didn't really materialize. And though we saw the Dow Jones Industrial Average dipping on the lower side, but it has rebounded, and in today's session it is holding on to its gains, and it is showing signs of rather a further move on the higher side. So we will have to see how this price action evolves, and I think the price zone to watch out for in next couple of sessions is going to be this second resistance, which is there around 31,800. we have these price being highs around 31,700, and these are going to be immediate hurdles. But if we consider these consolidation which has lasted for more than a week now, and these swing lows, the Dow Jones Industrial Average has found buying momentum, and it hasn't really seen much of a dip on the lower side. I think that gives fair amount of confidence for market participants to believe in this bullish story of the Dow Jones Industrial Average, and we might see further gains moving ahead also. If we consider the regression curve, it is still pointing northward only. So both these technical formations of regression curve as well as pivot point series are more conducive for the buy trade in today's session. But given the backdrop of this very range bound momentum, I think in today's session we will have to remain a bit careful. And my personal opinion would be to avoid fresh trading in today's session in the Dow Jones Industrial Average, and rather allow the price action to settle down. And then by the time we get back for trading on the Monday, we will have the formation in place, which will give a lot more clearer picture for which side to trade on. And as of now, if I consider the price formation so far in US station, it has been supportive of the bullish momentum, and these lows established just little above 31,350 gives us a picture of double bottom on the hourly time frame chart. And I think if we keep that in mind, the necessary, or you can say the implication becomes that we are likely to have more possibility of the Dow Jones Industrial Average moving towards this prior swing high. So this is the price area to watch out for around 13,500. And if the Dow Jones Industrial Average holds on to these gains and consolidates above 13,500, then we will have more reasons to believe in the potential of the Dow Jones Industrial Average, and then I think we can even look for fresh trading opportunities on the long side while keeping the stop loss just little below this immediate swing low, which is there around 13,350. And for a risk of around 150 to 200 points, we can look for more than 300 points of move on the higher side with new highs in sight for the DJIA, Dow Jones Industrial Average. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and weekend. See you on Monday. Goodbye.